Insurance Connection. Happy Tuesday, this wonderful, windy, cloudy Tuesday. I love this weather, by the way, because we know it's going to get hot real soon here in June, July, and August, and September. Well, let's enjoy this weather while we can. I want to thank the listeners for tuning in to Your Insurance Connection. On Your Insurance Connection, we talk about insurance. We educate you on insurance within a allowed amount of time. We have a half hour to get you educated as much as we can so we can help you better understand your insurance coverages. Yes, we try to save you money on your auto insurance, homeowners insurance. We do offer life insurance. But let's talk about the auto insurance, because I know a lot of you have called me and you want to get a better rate on your auto insurance. And there are times when we can get you a better rate, but the best customer for me, and I'm going to tell you right now, the best customer for me, if you've been with your insurance company for 3 years, you've been with 3 years, no lapse in coverages, and when you start shopping for auto insurance, this is a little auto insurance shopping secret, you want to increase your coverages you currently have. So if you say, well, I'm paying a little bit too much, yes, you're going to pay just a few dollars more per month, but it looks better when you come shopping. So when you start shopping for auto insurance, the minimum state requirement is $25,000 per person, $50,000 each accident. Bump that up to $50,000, $100,000. Let me say that again. When you're shopping for auto insurance with the minimum state requirement at $25,000 per person, $50,000 each accident, you want to contact your insurance company. You're not going to be billed for 30 days. But what you want to do is get a declaration page showing $50,000 per person or even $100,000 per person, $300,000 each accident, $50,000 per person, $100,000 each accident. You want to bump it up at least two grades up. And the reason why you want to do that, because when you come to an insurance company, especially an auto insurance company, they want to know what your previous liability coverages are. The higher liability you have on your auto insurance, the better rate you're going to get. For more information, my name is Marquez. This is Your Insurance Connection. My contact phone number is 702-236-2624, 702-236-2624. My location is right on the corner of Sahara and Rancho in the U.S. Bank building. I'm located on the 8th floor. We work by appointment. Veronica's standing by now. She's going to get your name, your phone number. We're going to call you right back after the show. 702-236-2624. That's the number to remember. And if you want to call in on the radio station today, we will take your calls at 702-647-3688 with any comment or questions. And I want to thank the listeners that came in last week and all year and purchased home, auto, and life insurance. I want to thank you so much for your continued support, and also 88.1 for allowing this platform to come here and talk about insurance. Only on 88.1. I know the fundraiser is over for 88.1, but you know the radio station take donations all year round. Your tax deductible donation, give them a call, come in, make a pledge. Regardless if it's a pledge drive or not, we need your continued support right here at 88.1. We're a family here at 88.1. Can you imagine the community without 88.1? And we need to keep our baby fed, and the way we feed our babies with money. But whatever donation is, never too small. It is a tax-deductible donation. Keep us on the radio, because all these talk shows that we have, Sheila, She Does Loan, she's on Wednesdays now from 10:30 to 11 o'clock, starting next Wednesday. I was on her show yesterday, and she's talking about how to refinance your mortgage, take money out and pay off student debt, credit cards, car loans, whatever you want to do, buy an investment property. Check her out on Wednesdays from right here at 88.1, starting next Wednesday from 10:30 to 11 o'clock. And also we have Like It Is Radio with Cheryl and Franklin. They keep it real. And that's on Fridays from 10 o'clock to 11 o'clock. We do broadcast every other Friday. We will not be broadcasting this Friday because, we're doctors Friday. But we'll be back the following Tuesday and Friday of next week. Like It Is Radio, they keep it up on social events and also political events, not only local but also nationwide too. So check them out right here at 88.1, home of the People's Station, all new Power 88. I also want to thank our Facebook listeners that tune in on our Facebook. And Frank, good morning. How are you today?
Oh, pretty good. How are you?
Oh, man, good. You know, the Don Father was here last week. Why does he shake you up a little bit?
I can't explain it. He gets a little intimidating sometimes, but Yeah, I'm trying to get used to it.
Oh, you're trying to get used to it. The Donald father was here, and he's, with that voice, I can't do the voice like it. It's the voice, I don't know, and the look too.
Yeah.
He shakes me up every now and then too, but that's okay, Frank. We're gonna get around. Frank is our media. He's over our media, and he posts on Facebook, and also keep me posted on the questions people from Facebook want to know. What is the questions today? We're gonna go right into it today, Frank.
Okay, the first one is a life insurance question, and this person wants to know: is it possible to purchase a life insurance policy that pays the beneficiary for the remainder of their life?
Yes. Okay. So the way to set that up is probably your best bet is to a trust. Now we can make the beneficiary. The beneficiary. Now, these questions are not rehearsed, so I have to think right on the spot. So, the way to do it, you can assign the primary beneficiary would be the trust, and you would set it up with your lawyer to have, the money distributed throughout a period of time, and you may have multiple beneficiaries of this. Money being distributed over a period of years. But I would think the way to do it is to set up a trust. You would have to consult an attorney, or call us first. The first thing you need to do is get a life insurance policy. Now, a policy that's going to pay out over time. You may want a lump sum initially, and then you want payments over a period of time. Now, we don't advocate putting young children as a beneficiary under 18 years young as your primary beneficiary. We would like an adult as a primary beneficiary, and the reason why is because it is. Now, making a 6 or 7 year old a primary beneficiary without a trust, we're going to put that money in reserves until that child turns 18 years young. Just imagine a $200,000 life insurance policy, and an 18-year-old is going to receive those benefits at one time, one check, 18 years young. If they lose a mother or father or grandparent, whoever leaves them this $200,000 death benefit, they're going to get it at one time, 18 years young. They're not responsible at that age. I don't care how good you are. $200,000. Can you imagine that? Tax-free benefit all at one time when they turn 18 years young. However, I do like the question they post on Facebook. How do you get the money over time? Now, in this scenario, will you have a young person as one of the beneficiaries? They can get a lump sum, so much money up front to pay for college. Then they could take disbursements for a period of time. But the first thing you need to do is pick up the phone, call me, get the life insurance first. Get the life insurance policy first. Once we issue it, then you can take it to your attorney. They can set you up a trust. We can also do a change of beneficiary form, so the beneficiaries will get the disbursements over a period of time. For more information, call me at 702-236-2624, 702-236-2624. That's a good question, because you had me thinking on that. I have to think right here live on radio, because I don't know what these questions are. We come in the studio, we have about 6 or 7 minutes before we come in. Kimberly comes out, kiss, 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 hi, and here we are. Good question. That's a very good question. 702-236-2624, 702-236-2624. Call us. We can help you with that. Any life insurance questions, auto, home, and also renters. Okay. What else do we have, Frank? Right. Thank you. Good question.
All right. Well, if you thought that one was a good one, here it is.
Buckle my seatbelt. I'm buckled up. I'm ready.
All right. Now, this person has I guess is thinking about life insurance and wants to know about how non-forfeiture
yeah
clause. They want to know if it's a good thing to have as part of their life insurance policy.
See, that's I don't know about that one, Frank. If anyone knows about that one, I got a couple life insurance agents out there that that's beyond me on that one. Out of all the questions you've asked me, I have to get back to you on that one. If any insurance agents want to call in and answer that question, you're welcome to do that.
Yeah, because they were saying that the clause, I guess, in the insurance policy is with a cash value that entitles the insured to have all or a portion of the benefits or a partial refund on premiums paid. I had to look that up.
Well, that's probably like a IUL, you know, the one of those when you see those one of those IULs when you have to put up the IULs. You have to start off with $100,000, and depending on the person's age. Depends on the person's age. Those cost a lot of money to get started, but they're very good policies because what they do over a period of time, they give you those, you know, those cash payouts and keeping the policy active, and also the death benefit too. I'm not familiar with that policy because I don't offer the IULs. I don't, but there are a lot of insurance agents that's really up on them. The IULs work better depending on the age between a person between 35 and more at 50. Now you can get them at an older age, but I think the older you get, the larger cash you have to come up with to get those policies started. We can find that. We'll find out that question. We'll answer that question next time we come on the radio. Or again, if any insurance agents out there know the answer to that one, you feel free to call in. Tim Phoebus called in last week and helped me out with one of those questions that you had, one of these mind twisters. Thanks, Frank. Appreciate it. But you know, we can help you with that. Call us at 702-647-3688. That's the number of the line, and help us out with that question. What's the next question? Give me an easy one, please.
Right,
how do you be a contingent beneficiary?
This one has to do with rideshare.
Rideshare. Oh, okay, good.
So,
thank you. I can breathe now. All right, rideshare.
All right, and this person wants to know, when I drive for my rideshare company, they provide insurance as long as the app is on. My coverages, the coverages that they offer are $50,000 maximum limit per person, $100 maximum limit per accident, and $25,000 maximum limit for property damage, no deductible. Is that enough, or does the law require I give more?
No, see, that's a good question, because I don't do rideshare, and the reason why, because now when you do a rideshare, I want to be sure. I want to know for sure that if something happens, the person that's driving me around in their personal vehicle that has enough auto insurance. Now, I have been in a couple of ride shares, and one of the questions I do ask the person that has ride share, and they're in business for yourself. Now, if you do ride share, if you have this for your business, you are a business owner. You want to carry higher liability limits. You really do. $50,000, $100,000 is not enough. Now, the ride share may cover your passengers while you have passengers in your vehicle, but I want to make sure you have enough coverage too, just in case we need more insurance. I don't know how much they cover, but when I ask these ride shares, a person that's driving, I said, what's your coverages on your auto? And they want to know why, because I'm an insurance agent and I'm a passenger in your car. I want to know what kind of insurances you carrying. Are you carrying lower limits or are you carrying higher limits? And most of the time when I've had these ride shares, and I get these ride shares because I may drop my truck off and I need to ride back to my office, or I'm at the hotel, I need to ride to the airport, and they provide this service. I ask them, and all of them tell me they have the minimum requirements. All of them tell me they have the minimum requirements. That makes me a little concerned on a ride share. If you are a ride share person transporting people, you should have minimum $100,000 per person, $300,000 each accident. $100,000 property damage. Protect yourself. You're not protecting yourself by doing that. You're protecting your passengers in your vehicle. It's just a good business. It's just good business. $100,000 per person, $300,000 each accident. You don't want to be liable at an at-fault accident. People are injured, and maybe the rideshare company said, well, you know, you was in violation of rule, whatever. Now the responsibility's on you. You know, you have to be careful with that. Carry a minimum of $100,000 per person, $300,000 each accident, $100,000 property damage on your ride share. That puts you in a better position, and also you're a business owner too. You want to take care of your business. That's taking care of business. For more information, my name is Donald Marquez. This is Your Insurance Connection. Veronica's standing by right now. She'll take your name, your phone number. My contact number is 702-236-2624. These are very good questions. Was that the last question, Frank?
Yes.
Okay. I want to thank you, Frank, for those questions. And and again, if we have an insurance agent out there that can answer that question, the number 2 question, but we will find that one out, and we'll go back to the office and research that one. so we can keep our listeners informed. Also, wanted to bring up when you have a life insurance policy, and before you cancel your policy, there are some options for you. You can, they may be cash value in your policy. When a person is in a position where they have to make a decision, because I've seen this over and over again, when a person has to make a decision, because sometimes some of these life insurance policies, as you get older, they will change on you. In other words, how the changes made. And I don't offer these life insurance policies. This is all the one with the, you buy this, you save this, it's going to flexible, variable premiums, all this flexible and variable premiums. You don't even looking at that. You're looking at the coverage and you're looking at the payment each month. But I've seen a lot of policies that I've reviewed where they have this flexible and variable premium built within the life insurance policy. Okay? Now, as you get older, and when you get in your 70s or 75 or even 80s, these policies could change on you when the words variable, flexible, or in the premium language of the life insurance policy. Now, initiating a life insurance policy, once you get the policy, you're happy you get your policy. You don't know what these things, these words mean until all of a sudden, you hear me on the radio, you pull your life insurance policy out, and you do the right thing. You call your life insurance company and you ask them questions about your life insurance policy. Or better yet, what I've witnessed over the years, people call me, we sit down, have a review, and I see these variable, flexible premiums. And of course, sometimes what we have to do is get on the phone with the life insurance company, and I ask them the right questions because I can speak their language. I say, okay, what does this mean to the insured? Because with all life insurance policies, you pay what we call the target premium. The target premium, the minimum premium that asked for each month, because this is what you qualify for. It may not be enough to fund the policy over the long term. So what happens? If you have a policy that builds cash value on a UL, universal life, not so much a whole life, but I see this a lot in ULs or these variable, flexible premiums, it does erode the cash value over time. I know it's a lot of information, and then you're wondering what happened to my cash value. Your cash value builds up, but you don't put enough in the policy each month on your premium payment. You just pay the minimum payment. Now, if you want to build your cash value up a lot faster, especially with the older policies, because with the older policies over, let's say, 15 years old, we were getting much better interest rates than we have today. The average UL, universal life, pays only about 2.5% to 3%, even 2%. Some of them are 2% on the interest that you pay on the premium. Now, the older policies, 15, 20 years ago, were paying 4.5%, 5% interest. Some of those policies are doing as high as, 10%, or maybe even more, depending on the policy. However, today's policies, if you bought a policy years ago and it has flexible premium in it, variable premium, that means your premium is going to change over time. It's a lot of information. I know it is. Take out your life insurance policy. Do not try to figure this out on your own. This is why I'm here. It doesn't cost you anything to come to my office. I don't charge for my services. We try to help you. Now, we can offer you a much better policy, or if you have a policy, you can make adjustments on it now. Do not kick the can and wait. Do not procrastinate, because when those changes are made, you have a contract with the life insurance policy, with the life insurance company. That policy is a contract. Now, there's a lot of nice people out there, but that contract is going to change on you, and once it changes, they'll pull that money right out of your account all at once. So if the premium, let's say, is average $85 a month, whatever, okay? $85 a month or less, or maybe a little bit more than that, then all of a sudden your premium adjusts. And this is what I've seen over and over again. All of a sudden, because you have an adjustable premium in there, you go from $85 a month, all of a sudden they're pulling out $350 a month on your policy. You're like, what happened? What's going on? Then they'll tell you you have an adjustable, variable, flexible life insurance. I don't offer those. I keep my insurance policies very simple. I represent 66 life insurance companies. 66. You know what your premium is going to be. You know what your face mask is going to be. Because I like sleeping at night. I don't want to get a phone call and say, what did you sell me? No, I don't go through all that fancy, all those twists and turns, because people, they like to know that their life insurance policy is going to be there when they need it. Now, on your term life insurance, I get this a lot. Well, it's up to age 95. Yes, it is. It does. You're covered up to age 95. I had this a couple of weeks ago. Well, I get it quite often. However, after the term ends, the 20-year or the 30-year term ends, your policy premium goes up every single year on your anniversary. Every single year on your anniversary. What you can do before that term policy terms out, we can convert that over to a universal life insurance or to a whole life policy, according to your age and your health category when the policy was issued. It's a lot of moving parts in life insurance. So don't pick up something in the mail and say to fill it out and send it in because you think you're getting a good deal. That's the worst deal you can get, because you're going to pay more per unit. Every unit should be around $1,000. I've seen where some companies, they offer you 8 units of insurance coverage. Now, you're older, you're in your 80s, and you want to get these 8 units. But in reality, you only have about $3,000 worth of life insurance. You think you have $8,000 worth of life insurance because they are selling what we call units. It's very misleading, especially for our senior community, because people come to me and say, I thought I had $8,000 worth of life insurance. No, you don't. You have 8 units, which don't make any sense to me, but you only really have $3,500 worth of life insurance. This is why, buying life insurance by way of internet or by way of mail, it's not a good idea, unless the mail is coming from me. Well, I don't send any mail out. But anyway, if it's coming from me, I want a life insurance contract with you where you know what your payment is going to be, you know what the face amount is going to be, because when that day comes, and it comes for each and every one of us, your family wants to know, do I have to pay for this service? Do I have to pay for these final expenses? Or did mom or dad take care of their business? Or did my brother or my sister take care of their business? Because now you may be the responsible party that have to pay this final expense. And, GoFundMe is not an insurance contract. It's just not. Washing cars is not an insurance policy remedy because, you didn't take care of business. And asking people for donation, that has to be extremely embarrassing to all families that go out and say, well, you know what, we're going to react. We're not going to be proactive. We're just going to wash cars, bake cakes. You got to sell a cake. You just can't do it. I mean, you really want to leave your legacy like that? I mean, I think about it sometimes. It's just mind-boggling. We drive nice cars, nice clothes, have jewelry, nice homes, and no life insurance. Your life insurance policy is your savings account. Look at it as your savings account for that rainy day. I remember back in the day, my mom used to say, well, you got to save money for a rainy day, And well, that rain came from her and my father. And, we had to take care of business. And I'm so glad they did. They had life insurance policies. I made sure my mom had a life insurance policy because I paid on it each month. Because I wasn't going to be stuck with it. I wasn't. Because I know, burying my father, it was a lot of money then. And these funeral homes, they have a rate increase every 6 months. Every 6 months. Now, if you think you can bury somebody today on a traditional burial for less than $10,000 without a plot, it's not that easy. I've looked at the rate books they have, and the average funeral today costs around about $15,000, anywhere from $12,000 to $15,000. Now, if you want to be cremated, get yourself a $5,000 life insurance policy. That may be enough, but if your family has to move furniture out the house, if your family have to come in from out of town, we may have to look at getting a larger life insurance policy. Maybe $10,000. Maybe $10,000. A lot of you come to me, don't know how much life insurance you need. What we'll do is sit down with you. Okay, do you own your home? Do you have any credit cards? Do you have a car payment? Now, credit cards you can eliminate. They're deceased. You don't have to pay the credit card bills anymore. But you can't use the credit card bill. You can't use the credit card to bury a loved one. If the credit card is in the loved one's name, they're deceased. People tried that. They called me one day and said, you won't believe this, Frank. They said, they gave the people at the funeral home Big Mama's credit card. And they said, well, can we use this credit card? And they said, well, this is Big Mama. credit card. And the guy at the funeral home said, well, that big mama in the back, she's the deceased, right? Yeah, we want to use her credit card to pay the funeral bill. They said, no, you can't use Big Mama's credit card.
Yeah,
So,
I've heard worse.
Huh? You've heard worse? Yeah, we're not laughing, but I'm just saying these are scenarios that come up, we hear about. Yeah. And they try to use the deceased credit card. You can't do that. That's not the plan. That's not the plan. The plan is this. Pick up the phone. Call me, 702-236-2624. Let us help you make the right decision. One of the biggest decisions you're going to make in your life, because if you don't do anything, if you're sitting listening to me and say, I'm just, I don't believe in life insurance. Why? Believe this. Believe these funeral homes are in business for a reason. They have to dispose of your body. No one's going to throw you in Lake Mead. No one's going to bury you in the backyard. No one's going to throw you in a dumpster. That's all illegal. They have to dispose of the body by way of, putting you to rest by way of cremation, or burying you in the ground. Both cost money. Do not pass down generational debt to your family. It prohibits your family from taking a vacation, home improvement loans, sending their child to college, paying off their own bills, and you're sitting around not doing anything, just letting things happen, just letting people pay your own expenses. Let's stop that. Let's stop that cycle, because what we're doing from one generation to the next is passing on debt, and we've done that enough. My name is Donald Marquez. This is Your Insurance Connection. Give us a call at 702-236-2624, 702-236-2624. I want to thank the listeners for tuning in. We're going to do this again next week from 9:30 to 10 o'clock right here at home of the People Station. You guys have a great week. We'll talk to you soon. And between now and then, just keep it crispy.